I now hand the conference over to Mr. Kshitij Jain of Godrej Properties. Thank you, and over to you, sir.
Yes, good evening, everyone, and thank you for joining us on the Godrej Properties Q1FY24 results conference call. We have with us Mr. Pirojsha Godrej, Executive Chairperson, Mr. Gaurav Pandey, Managing Director and CEO, and Mr. Rajendra Khetawat, CFO of the company. Before we begin this call, I would like to point out that some statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the results presentation emailed to you earlier. I would now like to invite Mr. Godrej to make his opening remarks.
Good afternoon, everyone. Thank you for joining us for Godrej Properties first quarter financial year 2024 conference call. I'll begin by discussing the highlights of the quarter, and we then look forward to taking your questions and suggestions. After recording a record sales performance in the fourth quarter of the last financial year, bookings were muted in the first quarter with a decline of 11% year-on-year to rupees 2,254 crore. This was due to several of our planned launches slipping out of the quarter due to delays in regulatory approval. Sales from existing inventory, however, grew by 19% year-on-year to rupees 1,816 crore. Godrej Splendor in Bengaluru, launched in the previous quarter, recorded sales above rupees 350 crore for the second consecutive quarter. We remain confident of meeting our annual bookings guidance of rupees 14,000 crore. We delivered 4.9 million square feet for the quarter across 4 regions. This indicates 39% achievement of our annual target of 12.5 million square feet of deliveries in the first quarter alone, setting us up well to meet our annual target. From a business development perspective, I'm happy to report that we've started the financial year with 4 new project additions to our portfolio with an expected combined revenue potential of approximately 6,450 crore or 43% of our annual business development target of rupees 15,000 crore of expected booking value. All 4 of these projects are outright purchases in the premium to luxury segment. We believe these projects will support our efforts to maintain rapid top-line growth rates while substantially improving the margin profile of our company. One of the projects at New Alipore will expand our presence in Kolkata, while 3 others in Gurgaon will help us strengthen our position in the National Capital Region. We now have our strongest ever project pipeline, and the most important objective going forward will be to get all of our recently added projects launched in the upcoming quarters. We believe this can dramatically accelerate our bookings and earnings growth trajectory in the years ahead. Our reported earnings for the first quarter showed healthy growth, with total income increasing by 251% to rupees 1,315 crore, EBITDA increasing by 98% to rupees 230 crore, and net profit increasing by 174% to rupees 125 crore. Before I conclude, I also want to update you on the project Godrej Summit, located near Dwarka Expressway in Gurgaon, developed by our wholly owned subsidiary Godrej Projects Development Limited. It is a residential project which was completed in phases between 2017 and 2018. The on-ground project team recently appointed an external expert to undertake a detailed independent assessment of the project due to a concern recently discovered in one of the apartments. This assessment identified the presence of chloride in the concrete used in the project, which could have happened because of the presence of chloride in the water or aggregate used in concrete. The chloride, when in contact with water, leads to corrosion of steel reinforcement. The external expert further advised that with the required repair and maintenance framework, the building is expected to perform as per its intended design life. Accordingly, an estimated amount of rupees 155 crore towards repair, maintenance, claims or any other ancillary costs has been provided for in the first quarter. GPDL believes that it has the ability to claim against the contractors who constructed Godrej Summit. GPDL has also made an offer to buy back units or provide rentals to all the apartment owners of the project for the period of repairs and will account for the buyback if and when the intending customers execute the relevant documentation. Excluding the provision, our net profit for the quarter would have been rupees 241 crore, a 424% increase. On that note, I conclude my remarks. Thank you all for joining us on the call. We'd now be happy to discuss any questions, comments, or suggestions you may have.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, you may enter star and 1. We have the first question from the line of Puneet Gulati from HSBC. Please go ahead.
Thank you so much for the opportunity. My first question obviously is on the 155 crore provision that you made. What is the max liability that you see here in terms of legal liabilities or a long drawn case which can potentially hurt extremely good brand equity that you enjoy? How are you looking at it, and how are you protecting the interests of the company here?
Yeah, thanks, Puneet. I think, of course, we've taken the matter very seriously. We're doing our best to immediately ensure the teams on the ground have responded effectively and do what is needed to first ensure customers' safety and also ensure that they feel financially secure through this buyback offer. Our current sense is that this estimate that the provision that we've provided for is our current best estimate of the impact. We do feel that, and our legal team feels strongly that we have strong claims against the contractors who constructed the project, but we have not, accounted for any potential receipts from those. So that could be an additional benefit. It's very hard to comment on, what, if any, legal liabilities there could be. But as of now, this is our best estimate of the impact from this.
And who are the contractors and their ability to pay if needed?
Yeah, there are a couple of contractors. I think, in the interest of our own, we've yet to initiate our legal action, etc. We'd keep that to ourselves for now, but they're well-regarded contractors.
Understood. My second question is on the collections, which were, a bit weaker. Is it possible to get a breakup of what part of collections came from the new launches and what part from the sustained sales? And similar number for last year, if possible.
Puneet, it is a long list. Maybe we can connect offline and give it a number.
Okay, great. That's fine. And lastly, if you can, talk a bit about your thought process in buying back the stake of the partner in the Bhandup project. What is driving these kind of decisions? Is it being driven at your end or at the partner's end, and how are the financials managed there?
I think obviously it's a combination, and for any terms of any contract to be changed, both sides would have to agree. But I think, as you're aware, since the time we've added some of these projects, our focus has been on increasing our economic interest in the project, and we've been less interested in developing projects where our economic interest has been quite moderate. So I think in line with that thinking, we saw an opportunity here where the partner was also happy to receive upfront cash flow to convert this into an outright project. We're quite confident that the valuation will provide us an opportunity to make healthy returns. So that was kind of the thinking there.
Okay, that's helpful. Thank you so much and all the best.
Thanks, Puneet.
Thank you. We have the next question from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Yeah, hi, Pirocha. Thanks for the opportunity. So my first question is on Project Summit. If you can help us understand what was the total sales value of this project when it was launched, and whether now it's deeply in the money for the investors or the buyers, because you've also given a buyback offer. If there's not much of a difference, investors at least may panic and may offer it on the buyback. So just want to understand how big can that be in terms of liability.
Yeah, I think we had sales of a little over 1,000 crore total in the project. Our sense is that only a small proportion of that is likely to come back. This is what we're seeing in the buyback. But of course, the offer is open to any customer, so you should treat the potential liability as all customers potentially avail of it. But so far, we're talking about it now. Been a few weeks since this offer has been made. Only about 50 customers are seriously exploring it as of now, and we've executed about 10 agreements already. So I think we'll have to wait and watch. But our sense is, from what our teams on the ground are explaining in their interactions with the customers, that most customers are for now interested in remaining in the project and looking forward to us carrying out these repairs. But that would be the total amount. We, of course, once if for any of these units that we do end up buying back, we will have the opportunity to resell them post completing the required repairs under the guidance of these external experts. So we're reasonably confident of being able to achieve the same price when we sell these units as we would be buying them back for.
So what is the pricing formula of buyback, and what was the launch price of these apartments?
So the buyback price is linked to the price at which they were sold, and it's usually depending on which specific unit and when the customer bought it, largely in the range of between 5,000 to 7,000 rupees a square foot.
And what will be the prevailing prices right now in that micro market and for the same product, like if you have to resell it?
So as I said, I think it's very hard to estimate. Our current best sense is that we're reasonably confident of being able to achieve the same price at which we buy back the unit for. Obviously, for a newer development, etc., in the same location, you might be able to get a better prices. But I think in this situation, I don't think we're thinking of making any very healthy positive return on this, but we also don't expect to not be able to achieve break-even.
Okay, and just my last question on the launch pipeline. So any update on the Ashok Vihar project and the South Mumbai project? So when do you expect them to break ground in terms of launches?
Thanks for the question. Ashok Vihar, seems to be on track now. It's just like I updated in the last call. It seems to be heading towards sort of a launch in the H2 of this year. We've seen some very interesting breakthroughs in the last 6 to 7 weeks, and fingers crossed, if it continues in its momentum, you'll hear some good news.
Okay. And then on the South Mumbai project?
You're referring to which specific one, Carmichael? Or
the Mahalakshmi and so Mahalakshmi project and then Worli project.
So Mahalakshmi, should get launched likely in this quarter. I mean, this will be a sort of a phase-wise strategy that we have thought of. And starting from this quarter, we're looking at, we're seeing a lot of interest in the market. So, likely we'll hit the market from this quarter and we'll continue to even in the next quarter. And the other project that we have is in Carmichael, that's going on track, and again, that will be a launch in the H2 of this year.
Okay. Well, thank you, Gaurav. Thanks for answering.
Thanks.
Thank you. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Kunal Khudania from DSP Asset Managers. Please go ahead.
Hi, this is Vivek Ramakrishnan. My question was around the peak net debt levels that you'll go up to. It's now 5,300 crores. So are we near the peak? Especially if you look at the rating rationales, where ICRA said that if the fund flow from operations to net debt to fund flow from operations is over 2.5x, it's a negative rating trigger. So just wanted to get a sense of how you expect the operational cash flows to be. That's my only question. Thanks.
So we are quite confident this operating cash flow would be better in the coming quarters because a couple of our launches, high impact launches, has been delayed due to delay in approval. So the collections are little pushed forward. So once and the construction outflows are consistent. If you see, outflows has been consistent quarter on quarter. So we expect this operating cash flow to be better in second half of the financial year, and we don't see any concern as far as the rating rationale is concerned. So we would be able to meet our rating rationale guidance.
Excellent, sir. Just wanted to know, is the debt likely to increase from here, or is this the peak kind of debt levels that you expect to see till you get to the next phase?
I think you will see some increase likely given the business development over the next couple of quarters, but we think, thereafter next year, we think the calendar year 24 is when there's a lot of these project launches happening, both in the next couple of quarters as well as next year itself. We expect very strong positive operating cash flows.
Thank you very much and wish you luck.
Thank you.
Thank you. We have the next question from the line of Pritesh Sheth from Motilal Oswal. Please go ahead.
Hi. Thanks for taking my question. First is on our Gurgaon pipeline, which is lined up, pretty well after our recent acquisition. What sort of launch timelines we are targeting across the projects that we acquired recently? Should we see any of them coming this year?
Yeah, thanks for the question. Gurgaon should start seeing launches within the financial year. Likely, we should see launches in Q4. We've actually internally tracking the approvals. They are not just on track, they tend to do a little bit better than what we had initially envisaged from an approval point of view. So you will see launches starting from Q4 itself.
Sure, got it. And just to continue on the previous question, so we have had a very healthy spend on land and acquisition, and that will continue because of our strong business development plan. So one part is, how should we expect the business development going ahead in this year, and how much do we envisage to spend on the business development this year?
Yeah, essentially, if you see, we've been noticing consistent trend, and whenever we are able to get our launches by way of approvals on track, we are seeing stellar launches, and which is where the need for business development is kicking in. And initially, first part of the BD strategy was that we had a lot of opportunities to invest because we were not having the kind of inventory or presence in some of the cities we were present, like the Gurgaon. You would clearly see a lot of expansion specific focus on it. You would have seen Bombay, a lot of focus on transactions. And that was the first phase of strategy to, kind of get into a point of arrival in these cities. And that has given us a very good base. From a future BD strategy, I think it's more about calibration, right? So you will see focused effort on some specific markets where we are seeing our inventory getting sold out faster than, we are able to replenish it. So case in point would be, say, Bangalore. But it is going to be more dictated now in terms of inventory, lack of inventory in the market than just a secular BD expansion. So there's a sort of a shift in our strategy. But it would be fair to say that it is going to be more calibrated, more about specific micro markets or cities where we're not present that much, and you'll not likely see too many BD in those cities we've already made presence now.
Sure. So we'll stand by the 15,000 crore, or we can also exceed that number given the way the pipeline is looking at right now.
I think we are at the moment, frankly, more confident on the 15,000 crore. It, of course, all depends on the opportunity sets we will get to see in the market, but we will stick to our guidance right now.
Sure. And the amount of spending that you would do this year, any comment on that? I mean, 1,575 crore already done. Would this be like another 4,000, 5,000 crore of spend in land and approvals this year?
Not really. I mean, we're not looking, that kind of investment right now because, we do have a very strong pipeline. We want to get into a bit of also in the execution stage of some of these launches, which you should actually start seeing even this quarter itself. You would see within this quarter, one of the prominent investments we did in Noida will get into launch within this quarter. So idea is not to go aggressive in terms of capital deployment. Idea is to ensure that markets where we're not present, we just target those opportunities and conclude opportunities on that. So we're not at all looking at something of the capital size you're talking about.
Sure. And just lastly, you have certain market share in mind for every market, and where we are on that target right now. Are you happy with the BD pipeline across the markets? So just firstly on the market share probably you are targeting.
See, if I take a very macro view, it's a good question. If I take a very macro view, I think not now, but I think in the very long run, in any industry, you see market leaders, tend to operate between 30% to 60%. In any organized, structured businesses, real estate, of course, is a very, very, very nascent stage. So the headroom for growth to any developer is massive. Wherever we are present from a market share point of view, between 3.5% to 5%. So I think what we are looking at is a sort of a easily double-digit kind of a market share, kind of an opportunity. It will, however, be balanced with prudence. We would like to do it one step at a time, ensuring that we keep, while we aspire for aggressive growth, but we ensure we deliver profitable returns and manage our balance sheet within a particular range we are comfortable with. So I think it is, but the direction opportunity, if you ask me personally, in the long run, in the very long run, would be something, getting into really that kind of scale once this business continues to consolidate more.
Sure, got it. That's helpful. That's it from my side. All the best.
Thank you.
Thank you. Before we move to the next question, we would like to remind participants to ask a question. You may enter star and 1. We have the next question from the line of Abhinav Sinha from Jefferies. Please go ahead.
Hey, hi. A few questions. So, on the market side itself, how are we looking at pricing in the last, 3 odd months and going forward from here?
Thanks, Abhinav, for the question. So, we're happy to report that, we're able to still see consistent price increase in our portfolio. To give you sort of a directional sense, in North is seeing close to about 3 to 5% of market, price appreciation in most of our portfolio. Mumbai is seeing close to about 2 to 4% of price appreciation. Markets like Pune and all about 3 to 5%, and South say about 2 to 3%. And while this is very early days, but seems like even in the early signs of Q2, market is looking very exciting from this opportunity of price appreciation.
You meant this is the QOQ sort of trend, right?
Yes, quarter on quarter, yes.
Okay. And Gaurav, so while we are on the same, with the large sort of pipeline, now acquired, and you seem to be reaching the end of this broadly, 50-60,000 crores. How are we looking at margins on this portfolio? That,
yeah,
sorry, go ahead.
See, at a very macro level, our endeavor is to, generate PAT margins close to about in the range of 12 to 15%. That's the kind of range we look at generating long-term profitability. Of course, there are some projects where, it would be significantly higher, and there could be some project which is within this range would be in the lower side. But I would say it will be fair to expect that's the kind of direction, because that will translate into a sort of a 20% return on equity in the long run for us.
Okay, 20% on this. Okay, and Gaurav, on the second half, we do seem to be fairly heavy bias towards the second half of the year, at least on the pre-sale side. How will be the deliveries be spread out? So we've seen a good 1Q, but from here on, can you give us some sort of guidance on how the deliveries will happen?
See, largely, we will have, each quarter seeing some amount of OCs. I think it will be fairly larger in the later part of the year. But I think you will see some good amount of OCs, hopefully even, if we're able to secure all the approvals on time, even in quarter 2. So unlike the last year where, we got practically all the OCs only in the quarter 4, I think this will be a sort of a shift in terms of being able to have more predictable OC calendar. But yes, it will be spread out. I think it will be a bit of, if I were to say aspirationally, we'll have a good quarter 2. Quarter 3 will be reasonably balanced, and quarter 4 will be an upside. So if at all something slips in quarter 2, you'll have a quarter 3 more exciting. But it will be slightly different than the previous year.
Great. So thanks a lot, and all the best to the team.
Thanks, Abhinav.
Thank you. We have the next question from the line of Kunal Lakhan from CLSA. Please go ahead.
If you can give some color on what was the land payment related to the projects that we acquired in first quarter with GDV of 6,450 crores, and specific to these projects. Yeah.
So Kunal, like we have mentioned in our investor presentation, we got this Bhandup project. So we spent around 250 crores on this Bhandup, and then obviously in NCR we acquired 3 projects. So on that we have spent another 300 odd crores. Plus there were some milestone link payment for the deals which we have acquired in the last financial year. Those were on balance 600 odd crores. And then obviously there are various approvals, in terms of FSI, TBR, those accounted for the balance.
So you're trying to say that the Gurgaon 3 projects that we acquired, we spent about 300 crores for a GDV of closer to 5,000 crores or more than.
So no, I'm saying that whatever we have incurred in Q1, we are saying that the total land payment would be somewhere close to 1,600 crores, of which we have spent 300 crores.
For this 6,450 crores, total land payment would be 1,600.
Three Gurgaon deals.
3 Gurgaon deals. Okay, 5,000 crores of GDV.
Correct.
Okay. Just again trying to understand, like on the Gurgaon projects again, which sectors are these? Because because the second and the third land parcel seem to be a lot more expensive versus the first land.
So I'm not, I'm missing the location. Why don't we just connect offline? I'll give you the location. Exactly finding out.
These first two are prime golf course locations. So.
Yeah.
Okay. And just some color on land prices, since 2 of these projects were bought in auction. Just how have the land prices behaving in the last say couple of years? Because we have been quite active in terms of acquisition in Gurgaon. So.
Yeah, I think prices have definitely moved up, which is good on all the BD. We've been doing things like Ashok Vihar, our Noida land parcels last year, the other Gurgaon parcels we got last year as well. I think what gave us a lot of confidence on these two is, it is sort of a land value to booking value ratio is reasonably high for these because of the very prime location. These are projects we think will sell at 25,000 plus per square foot. And also we thought the project sizes were quite optimal. They're about 500,000 square feet each, which we think can be turned around quite quickly. So the kind of return on capital we think will be quite fast and meeting our threshold. But certainly land prices in NCR have been trending upwards.
Sure. And secondly, like on the Summit project, are we also like doing some audits, in projects in and around the vicinity, and or being done by the same contractors for any such glitches?
Yeah, we will certainly, I think take the learnings from this and ensure we implement them both in any projects around the vicinity, but also on our national portfolios. We've been doing a lot of work, even predating this, on ensuring that as we operationally scale to the level we'd like to, that we remain laser focused on quality and improving our processes and standards there. So yes, I think we will, as a part of that, do as we suggested.
Sure. And again, one last bookkeeping question. Rajendra, on the Kolkata land, what was the payment?
Kolkata land we paid a very small amount, which was just EMD amount. The balance payment has to be made. Total is around 225 odd crores.
Okay, great. Thanks and all the best.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and 1. We have the next question from the line of Puneet Gulati from HSBC. Please go ahead.
Yes, thanks so much for the opportunity again. In terms of the new projects which you have acquired under auction, what stage of approval are they and how soon can you launch these?
Thanks for the question. So, any auction land, it needs a series of, because the government usually does auction. These are all government-led auctions, and typically you will have to apply for building plan approval, and thereafter you have to take environmental approvals. You'll have to take the RERA approval. So it's a typical process that any land goes through. When we underwrite a deal, of course, we take a very conservative sort of a view towards approvals, because approval is a sort of a very unpredictable trajectory. But when we get into a bit of an execution stage, the entire strategy is to prepone as much as we can. And just to give you one or two examples about it, if you remember, we did a Noida acquisition very, very recently through auction. This was Sector 146. And initially, if you would have asked me this question a quarter or two back, rather when it was done, I would have given you a guidance about Q4. But what is heartening to note right now is we're in Q2 right now, and this is already under launch. So yes, from underwriting point of view, assume like-to-like, conservative kind of a thing, but endeavor is always to prepone launches to the best possible means. So yeah, we should see, hopefully the similar trend will continue even the subsequent quarters.
So I'm just trying to understand with the perspective of how RLD has behaved. Is this auction authority also likely to behave similarly, or is it more progressive?
I think this is a very different type of project. I think in our experience, very large projects with the land area being quite large, a lot of green areas, etc., do take longer to launch. We've seen that both in our own large projects as well as many of our peers when they have large project launches. So we certainly don't see these as anything like that. They're already in very urban areas, relatively small land sizes. So we would expect these to actually be quicker turnarounds than the usual.
Understood. That's very helpful. And lastly, if you can, give some color on the market demand, which market in your view is, stronger than the others? And are you worried about Gurugram market at all, given the kind of price increase and the euphoria that is going on there on the demand side?
Thanks for the question. It's a good question. See, essentially, if you see, wherever we are able to get our launches on time, approvals on time, we are able to see sort of record-breaking sales consistently in terms of all parameters that we look at from a launch point of view. And that's sort of a secular trend. So while, Q1 was muted, but frankly, it was purely because we didn't have launches, the big bang ones that we were looking at. It was, which is why 60% of Q1 was actually sustained. So we are not at all seeing from a macro point of view any market selling less or more. It is just about whichever market we're able to get approvals on time and it's available, we're able to sell. Coming to the second part of the question, which is more Gurgaon specific. See, when you sort of take a position from an investment point of view, you do not assume the world is going to be very, very exciting always. You take a sort of a very prudent view on terms of underwriting, pricing and all. It just happens that, if market continues what it is, I think we'll have some very good surprises. So I'm very, very confident that whatever we have underwritten, we will easily deliver on that. And we are seeing very strong demand even on the existing portfolio. So there are projects that were not as exciting for us in terms of sales velocity and sustenance have practically got sold out. So it's a good problem to have. To be very frank, in Gurgaon, we are, we don't have practically much of inventory without this new BD. So very strong market, very, very consistent demand and price appreciation we're seeing. So, but yes, it will be fair to say that whenever we underwrite, we want to be very cautious and very conservative. But from a delivery point of view, we should be able to deliver it.
And just to add to that, I think it is also fair to say that we feel business development has really clicked in Gurgaon. We now have the portfolio we need. So I think certainly from a going forward perspective, I think, there are areas we'll be more focused on, such as Bangalore, maybe Noida, plotted projects, etc. And Gurgaon, I think the BD work is largely now behind us.
Understood. That's very helpful. Thank you so much and all the best.
Thank you.
Thank you. Ladies and gentlemen, due to time constraints, we will take one last question from the line of Adhidev Chattopadhyay from ICICI Securities. Please go ahead.
Yeah, good evening, everyone. Thanks for the opportunity. So I had a few bookkeeping questions. So first you mentioned Ashok Vihar launch is now likely this year. Could you help remind us now out of the outstanding total land payment, how much has been incurred so far? And with the project launch coming up, what sort of land payments we need to make to the authorities for that project? That is one. And my second question is, when do we see a launch in the Godrej project? Will it happen sometime this year? And when is the hotel expected to open? And if you could help remind us, what are the commercials regarding the revenue share or whatever arrangement we have with the Taj Group? Yeah, thank you.
Yeah, thank you. I think Ashok Vihar, we expect if the launch happens as we hope over the next few months, this to be a key driver for the company, both on the P&L front as well as cash flow front, because of how well the market overall has done, and given the kind of scale we have there. So I think we've got 500 crore of remaining land payments, but the kind of positive operating cash flow we can expect there over the next couple of years, if this project launch now happens as we hope in the next few months, will be much more than any further land payment amount. On Vikhroli, we do expect to launch the project this financial year, and are looking forward to having the inventory in Vikhroli once again. And on the hotel, we're actually very close to now opening the hotel. I think it probably it will open actually in October. We've already received the occupation certificates there recently. And the hotel is owned outright by Godrej Properties, with Taj appointed as the manager for the hotel.
Okay, so this will be fully consolidated in our books, right? Just to understand this clearly. Yes. Okay, and sir, and on Ashok Vihar, this 500 crores balance is again payable in tranches, right? It is not at one go, right? We will not have to make this right now. It will again be spread out over milestones. Right?
The land payments are spread over 8 years. So what Pirojsha mentioned was the land payment which is falling due. Which will fall due. So obviously there will be future land payments. Which we'll have to make for next 2 to 3 years.
Okay, sir. Fine. That's it all from my side. All the best. Thank you.
Thank you. Ladies and gentlemen, that was the last question. I would now like to hand the conference back to the management for closing comments. Please go ahead.
I hope we've been able to answer all your questions. If you have any further questions or would like any additional information, we'd be happy to be of assistance. On behalf of the management, thanks again for taking the time to join us today.
Thank you, members of the management. Ladies and gentlemen, on behalf of Godrej Properties Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.